Hi, I'm Bob Vaughn with D&B Home Mortgage, and today I wanted to take a second to go over how to shop a loan estimate. But first, what is a loan estimate and when do we get one? Well, let's say you're pre-qualified and you're pre-approved and you're already out, you're shopping with your real estate agent and you find a home that you really like, you put an offer in and the seller accepts it. We're all excited, we're under contract, but guess what? It doesn't stop there. In fact, it starts there. And once you get a copy of that executed contract, you need to make sure to send it to the lender in which you're working with. To a lender, there are a bunch of fields that need to be filled out in order for an application to be finalized. And generally speaking, the last one which they're waiting on is an address. So when you get that executed contract and you send it to your lender, that now finalizes the application. And once an application is finalized, guess what? They are required by law to send you a copy of a document called a loan estimate within 3 business days. So what is a loan estimate? A loan estimate is essentially a form that itemizes all the anticipated costs involved in purchasing the piece of real estate. And there's a bunch of different boxes on a loan estimate, but when we're shopping different lenders to see what, are we getting the best deal, we're concerned with 2 major areas. And the first one is, which we're all probably familiar with, is what is the interest rate, okay? The second one is, what are the origination charges they may be charging you? And where does that show up on your loan estimate? It shows up under box A. Origination charges can come in all different shapes, all different sizes, and all different names. You can see origination charge called an application fee, maybe an underwriting fee, or a processing fee. They might even call it an origination charge. Another one that people might be very familiar with are points. Points is essentially the fee which they're going to charge you for the interest rate which they're giving you. So if a lender tells you they're going to give you, 4% interest rate, that by itself does not tell you everything you need to know. What you need to know when you're shopping amongst lenders is what is the interest rate plus what are the origination charges they are charging you. Total origination charge plus interest rate. Now we have enough information to make an educated decision on, are we getting the best deal or not? Okay, so let's say we're looking at 2 different lenders. And lender A is willing to offer us money at 4%, as well lender B is. Well, let's say that total origination charges here, lender A is not going to charge us anything for a 4% rate, but lender B is going to charge us $2,500. Well, we can see that by going with lender A, we have essentially saved ourselves $2,500. Now, origination charges do not always need to come as a 0 or positive number. Positive not meaning a good thing to you as a consumer. In fact, if you have a positive origination charge, that's money that you're going to be having to come out of pocket with that closing. In fact, origination charges can come in the form of a negative number. So let's say that lender A is actually going to give you $1,500 back now for a 4% rate. Well, guess what? We have a bigger discrepancy or a bigger difference than what we had last time. We actually have a $4,000 difference between lender A and lender B. And that's not necessarily all that uncommon. So you can see how it's very important to go out and shop and call different lenders to see, hey, what is the interest rate you're willing to offer me and what are the origination charges associated with that interest rate? So how do you shop? When should you shop? Well, let's say you get a loan estimate, all right? I would highly advise you as a consumer to go out and maybe spend the next day or 2 once you receive a loan estimate from your lender to go out and shop different lenders to see, hey, am I getting a good deal? Am I getting a bad deal? What is it those lenders in which you're now approaching, the new lenders, need in order to give you an interest rate, an origination charge quote? Well, what they need is, what is your credit score? So you need to know your credit score because all this stuff is based on credit score. You need to know the occupancy type. Is it a primary residence, a second home, or an investment property? Is it a single family home or a condo? And lastly, how much are you putting down on the purchase of this property? That right there gives the lender enough information to give you a quote on what their origination charge may be for the interest rate in which they're willing to offer you. So do not let them grind you through an entire application process. They don't need your social security number. They don't need your date of birth. They don't need to know your employment history. What you need to do is call the lender up on the phone and say, hey, listen, I'm calling you because I want to see what your current rate is and what the origination charge is with that rate. here's my credit score. I'm buying a primary residence, I'm buying a single family home, and I'm putting either 5% down, 10% down, or 20% down. What is it that you can offer me? Okay, so it's very important that you go out as a consumer and shop to make sure that you're getting the best deal, because it can save you thousands of dollars. I hope this helped, maybe possibly save you some money in the future. If you have any questions about loan estimates or fees involved in purchasing real estate, please feel free to give us a call. Our office number is 239-307-5363. Once again, my name is Bob Vaughn with D&B Home Mortgage. We'd love to hear from you, and I hope you have a wonderful day.